Hey, what's up you guys? This is Junior Trader, and in this video we are taking a look at S&P 500 and Nasdaq, and then we'll take a look at, or I should say first we'll take a look at tech stocks: Microsoft, Apple, Meta, Netflix, Google, and Amazon, and then we'll make our way to S&P 500 and Nasdaq. So the very first thing I want to start this video off with is letting you know none of this is any financial advice and it's only for education purposes. Also, don't forget to check out my Junior Trader Dividend Investing channel. Link to this channel is in the description of this video. And in this video, in videos and the last video that I have done here, I am talking about my recent some sells and purchases and what all in all, while the market is falling, what is my plan, and I'm also going over the numbers in my portfolio. So if you want to follow along, please subscribe here as well to this channel and check out the videos. Link to this channel is in the description of this video. All right, so let's start off with Microsoft over here. So very first thing I want to do is turn on one of my tools, and if you need access to my tools, links are in the description below of this video. All right, we are in the bearish structure since thereafter we got this red candle over here, right? And we have been just downtrending, and you can see structure has remained negative for us since thereafter. Orange also means negative, and so is red is negative, right? Orange is just that, okay, some rebound is happening, that's all. Again, if you will join my memberships, you will receive access to training videos as well to know how to read the tools and how to use them. So if I turn on the flow, you can see on flow it's very clear. You can see that the flow mode tells you pretty much like it's all been red. So any green candle, now if I turn this indicator off, is this candle a buy for me? Is the green candle, is it a buy for me? Well, if I turn on my indicator, I know that no, we are still in the bearish structure. It's not technically a buy, like as a buy in like a, the directional buy or swing buy based on the strategy, right? So no, this is not a buy, right? You can see we're still selling off. So what is Microsoft doing, right? Well, we are below 200 days moving average, and that's where we have a problem. We are lower highs, lower lows still. And as we continue to reject, which we did, now we are below 200 days moving average. Microsoft is full on in the bearish structure, right? You can see also my another tool dashboard shows everything is negative and bearish here. Multiple intervals as well, right? So let's go to the hourly interval and let's take a look at a couple of levels if we can identify for some potential plays. All right, here's the thing. Intraday, if we stay below 404.50, that's just going to keep it bearish until then. If rebound comes, watch the price. If you plan to trade the rebound and you got into the rebound, good play, take some profits out. This is what I mean to say by the structural change, right? 404 is the level. If we start to change above it, then continuation may happen. Otherwise, no. We are still in the negative trend, and as long as we continue to stay below now 404.45. Earlier we had $410 that I was saying, and you can see how well we rejected over there and continued lower, right? And now this is the level 404. Microsoft full on in the bearish mode still. Right now I'm not seeing any structural change on the daily interval. Yeah, and I showed you my tool as well. With that, we are still negative. Apple. So let's turn on the things structure here first. And we have been just again still in the bearish structure, guys. Right now candles are red. We are in the bearish structure. Let's go to the hourly interval and let's take a look at some more stuff here. We are still below the cloud, and you can see rebounds when they are coming. They are only coming in until the cloud, and then there is some that sell-off is continuing from thereafter. Let's actually do attentive here. At least for myself, I like to see attentive mode. So not necessarily we have changed any structure on Apple. For intraday, well, first of all, you can see we are still rejecting underneath of 200 hours moving average. And as if we, and this was another zone, right? 223 that I have been saying in my videos on Apple, that retest on this underneath of 223. If you're not closing above it, we are still technically in the bearish structure, and we are still rejecting right over there and is still selling off. Now, can a rebound continue? Well, if Apple can get above 221.18, some upside is again possible. Yeah, Apple is stubborn for that, okay? However, if we continue to stay below 221 and 15 cents and also below, and eventually as if we break 220 and 20 cents, you can just expect downside. That will be 216 and 98 cents is at least the next level you are watching on Apple. All in all, structure is still negative on Apple. Meta, at least right now, right? Meta structure on this is also bearish. You can see once, when did our structure break? Right over here, right? This is where our structure broke, and that's where my tool also marked the break of the structure. Let's do flow for now, and yeah, you can clearly see that we changed from green to red, and we have been still collapsing. So yeah, guys, we are still in the downtrend on the bigger scale, right? As we stay below 504 and 3 cents, we are still in the bearish territory. The next level is definitely this zone of 492 and 49 cents. Let's go to the hourly interval. And yep, as long as you can see we are rejecting in the cloud, 200 hours moving average still rejecting that, everything is still being rejected. So the level to watch is 504 and 15 cents. If we break above this, yeah, I would not put it right away as like, sure, there's definitely upside can come if we get above 504 and 7 cents, but only intraday upside. Otherwise, we are now still in the swing bearish zone, and anything below 504 and 15 cents is just, you know, a downside still. So yeah, we have lost a pivot again. So yeah, things are still bad here for Meta. Okay, so yeah, we're still in the downtrend. Let's take a look at Netflix. Netflix also, you can see structure changed bearish for us right over here. This was the candle that changed the structure for us, and thereafter we have been just collapsing and going down. And yeah, so now what from here? Well, if we are in the downtrend, let's just turn that off for a second. If we lose 664 50 days moving average, yeah, that's another loss of structure. We may continue much lower. If we can't hold blue box, and right now, guys, we do have a lower pivot as well, so we are in the downtrend. Where can the structure change back into the upside a little bit? So for that, Netflix has to get above 671. If it can do that, that's great. Otherwise, no, still downtrending. Google, I talked about it before as well. We have lost 200 days moving average as well. I'm turning on my structural indicator. We changed the structure. We broke the structure again right over here at this red candle. We have been plummeting since thereafter. And right now we are also below 200 days moving average. This is a very big collapse happening on Google. And I might take this opportunity to buy some Google ETF, actually not right away, but eventually when I feel comfortable with the price action. And I'll talk about that on my Junior Trader Dividend Investing channel, so subscribe here as well. And that's where, you know, right now, yeah, Google is, guys, any rebound, even if it comes until 155 and 87 cents, just going to be a rebound. But are we seeing signs of that? Not really. We are still in the downward structure. What is that level to watch? Oh wow, yeah, this thing is in quite a deeper sell-off, guys. If Google can get above 152 and 18 cents, some upside you can play, but just be careful. Very little rebound it would be. And then you are just watching which of these significant levels it rejects. What I'm trying to explain you that is, as long as we stay below that 155, was it? Let's actually go back to the daily interval again. Yeah, or sorry, 100, yeah, 155 and 90 cents, something like. Until then, even if rebound comes, we are still bearish. Technically, we have been in a bearish structure, and losing 200 days moving average was a collapse. Right now, if structure has to change bullish from here, it has to recapture above 155 and 95 cents without losing much further lower. All right. Accordingly, we'll have a stop loss and whatnot. Amazon. So Amazon still rejected again in that blue box right over here. It tried its best, but it couldn't. So, and I did scale out some of my position. Check out this video. I have sold some Amazon from my position for the reasons that it was breaking the structure again, and that's why. And so yeah, we have lost 200 days moving average right now. This thing is also looking like it's want to go down. Market can continue lower unless we see some structure change here. On Amazon, structure will only change a little bit again to the positive element if we get above 173 and 87 cents. But if I also turn on my tool, we lost the structure over here. And since then, you can see we have been still negative, right? So technically, yeah, we are still in the bearish structure though. So yeah, now let's go to the hourly interval. And yeah, for Amazon, the level to watch is actually 108.73. Above this, some upside. Otherwise, no. Below this, still in the downward structure and can continue lower as long as we stay below 173. All right, yeah, and accordingly, guys, you will have a stop loss on the other side of the level based on whatever position you take, with the stop loss on the other side of the structural change level that I'm providing you here, right? And the structure is not changing to the upside until those levels hit on Amazon that I talked, and all other stocks as well as I talked about, right? So let's take a look at S&P 500 and NASDAQ. So S&P 500, let's turn on our tool, and you can see we turned bearish right at this red candle, and structure has been going downtrend. This is quite a massive sell-off on SPY, and I don't expect this thing to become bullish. Well, if it doesn't fall much further lower and it can get above 547.87 cents, then only I see structure again changing. Otherwise, no. The next level is 530. A little bit of rebound would not change the structure overall, but rebound may be possible, just like we had rebounds here, guys, but we rejected underneath of the previous structure, right? My significant levels marks it automatically. All part of my tools. Links are in the description below of my memberships if you want access to these tools. And now, yeah, 547 below is just, still to the downtrend. Let's go to the hourly interval. Okay, SPY, look, after such massive sell-off, if something really has to change, things may look a little bit upside as well, but that would only happen on SPY if we get above 542 and 39 cents, so a little bit rebound. But I won't just buy and hold forever. That just be a little bit of a rebound until here, somewhere like 545, but overall structure, and that's your choice what you want to trade. Wait for the rebound to complete and short it until again structure changes, or you want to do whatever you want, right? Like, do you want to just trade the rebound or wait until the rebound completes and then short it in the downtrend already ongoing? So we are still in the lower highs, lower lows here, right? So, but yeah, that's little, yeah, 542 and 46 cents, and then 545 and 38 cents area. All right, that's SPY. Let's take a look at QQQ. So let's go to the daily interval first. QQQ is also in a bloodbath. It came to that significant level, which I have also marked red from before, and this thing also changed. Things changed the structure way before, actually. You can see this is where we changed the structure to bearish, and we have been just plummeting from thereafter. Right now, structure still remains bearish, guys, on this thing. Below 457 and 79 cents, anything that happens is just a rebound. If any upside comes, just in the bearish structure, and if we continue to reject there, and we just gonna continue lower, but that's the level for the structural area for now, right? Until then, there is no point in looking for strength over there. And let's see if we come down to that 200 days moving average overall, right? In the post market, we sold off more, and QQ is looking very weak. If any rebound has to come, well, QQ first needs to get above 450 and 97 cents. That rebound can then continue up to 454, but that would be it only. Just a rebound. Don't get carried away, all right? We are still in the downward structure. So yes, technically still lower highs, lower lows, and rebounds not going to change the structure as long as we are still below 457.75 cents overall. That's what the significant level is as well. And as if we stay below these levels, red line or these levels as I talked about, we just gonna continue lower. The place where it is at, which it broke in the post market, is that very strong level, and let's see if we can get above again at 200 days moving average, or are we gonna lose lower. But if one structure would change, I'll talk about it. If any upside would start forming, right now I'm not seeing any of that. All right, that's it for this video. If you found it helpful, valuable, hit the like, subscribe. Links to my tools are in the description of this video. All right, guys, take care. Bye.